Canadian investors holding TSX positions after yesterday's record close should watch how easing Middle East tensions reshapes sector leadership into next week. This is Modern Investing Techniques, episode 128. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. The S&P 500 closed at 7,737. That marks a gain of 1.8%. The NASDAQ Composite closed at 26,585. The TSX Composite closed at 35,802. Tech and mining shares led the TSX advance. Broader sentiment stayed supported by cooling geopolitical headlines. The nearest Fed decision remains the September meeting. Markets are pricing a possible hold or modest tightening bias after Kansas City Fed President Schmid called current policy insufficiently restrictive. Earnings season continues with AMD's just reported results providing a fresh data point on AI infrastructure demand. Remember, we covered DAL about 26 days ago on an earnings surprise entry. The lesson there was that even strong fundamentals can be overwhelmed by sector rotation. Buying calls instead of shares lets investors control the same number of shares with far less capital. This approach accepts a defined break-even point above the strike. Today's environment of elevated equity prices makes this capital efficiency trade-off especially relevant for TFSA accounts. Those accounts face strict contribution limits. An investor comparing a $100 stock purchase to a $5 call option can see the call requires roughly 5% of the cash outlay. Yet the call still delivers similar upside above its break-even. The approach has historically performed best in moderately bullish markets. Volatility keeps option premiums reasonable in those conditions. The main risk is time decay if the move does not materialize quickly. Platforms such as Questrade or Interactive Brokers display side-by-side capital and break-even calculations directly in the options chain. The same comparison also shows that the call buyer's maximum loss stays limited to the premium paid. Share ownership carries full downside exposure to zero. This structure becomes particularly useful when an investor already holds a concentrated position. The investor wants to add exposure without committing additional TFSA room. This is a simulated trade for educational purposes only. No real money is involved. The pick is AMD on the NASDAQ. The sector is tech. The strategy is post-earnings positioning ahead of potential follow-through in AI-related names. The hold period runs Monday through Friday. The catalyst is quarterly results just released. Market attention focuses on data center and AI revenue trends. Price action following the print will be measured against the 20-day and 50-day moving averages. Volume above the 20-day average on any rebound would strengthen the setup. A failure to hold the post-earnings low could trigger a 4 to 6% retracement. The stop loss sits 6% below entry. The target ranges from 3% to 7% over the 5-day window if sector rotation remains supportive. Confidence sits at medium because the earnings catalyst is present with sector momentum. No volume confirmation is yet available. This trade demonstrates how to size an entry immediately after an earnings release. It still requires volume confirmation before treating the move as confirmed. Listeners learn to separate the headline reaction from the subsequent price action that actually determines whether the catalyst produces excess return. The same process highlights why a single earnings print must still clear the volume filter before capital is committed. The options play growth lab overlays capital requirements, break-even prices, and probability of profit metrics directly on the options chain. Users can compare share ownership versus call buying in real time. It gives retail investors the same side-by-side analysis previously available only to institutional desks. Canadian users can access it through a standard brokerage login without additional fees for the basic comparison view. The tool surfaces the exact dollar difference in capital outlay and the precise break-even price for each strike. This feature set proves especially useful inside contribution limited accounts where every dollar of buying power matters. Research estimates roughly $36 trillion will move to Gen 10 and millennial households over the next 20 years. Down payment assistance already appears in 2025 survey data. The scale implies sustained demand for broad equity exposure as recipients deploy capital into long-term holdings. Seasonally adjusted annual home sales reached approximately 4.4 million. That level sits up 4.2% year over year. The reading marks the highest since November 2022. Starlink and AI businesses drove nearly doubled revenue and narrower operating losses in SpaceX's first public earnings release. Sales per subscriber declined even as total revenue climbed. That points to a shift toward lower ARPU enterprise and government contracts. A 2025 TrueWork survey showed more than half of recent buyers counted on lower rates to ease budgets. The finding underscores why rate decisions continue to influence both housing-related equities and consumer discretionary names. Total trades stand at 43. The win rate sits at 54%. That breaks down to 23 wins, 19 losses, and 1 break even. Cumulative P&L reaches $252.39. Matched window alpha versus the NASDAQ stands at 5.4% across 38 benchmarked trades. The sum of per trade alpha reaches 10.4% on a simple additive tally. Average return per trade comes in at 0.59%. The best trade delivered 20.11%. The worst trade posted a loss of 11.80%. The current streak stands at 3 losses. Open your brokerage platform and pull up the options chain for any TSX listed bank you already own. Note the 30-day at-the-money call bid price. Multiply that premium by 4 to annualize the yield. Record the number in a note. That figure represents the income opportunity visible today. Before we wrap, watch how AMD price action clears the 20-day moving average over the next few sessions. That's it for today's Modern Investing Techniques. The resources page has links to everything we discussed. Subscribe and share with someone who wants to go beyond index funds. See you tomorrow. And if you'd rather watch than listen, find us on YouTube at NARA Network. Links in the show notes. And before you go, this show is part of the NARA Network, a family of daily podcasts on tech, science, and markets, each one a short, sharp briefing you can finish on the commute. If today earned its place in your feed, here's your next listen: Environmental Intelligence, the Environment and Climate Policy Brief for Canada. Find every show free at naranetwork.com. Following the long arcs, story trackers on naranetwork.com follow major programs across episodes: Tesla, SpaceX, AI, space science, and more. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you didn't laugh?